Hi, I'm the Tax Geek, and I'm here to give you another oversimplified view of a complicated tax topic. Today, we answer the question, what happens when two people try to claim the same dependent? To actually learn what a dependent is, please click on the video in the upper right-hand corner of the screen or in the description below. This video might not make much sense otherwise. Often, it happens that one person can qualify to be the dependent of two or more people. Now, in general, if everyone is in agreement as to who is going to claim whom, the IRS doesn't get involved. But what happens when there is no agreement? The IRS then applies a set of rules to determine who rightly gets the dependent. To start out with, if one taxpayer claims a dependent under the qualified child tests, and another claims the same dependent under the qualified relative tests, the taxpayer with the qualified child always prevails. It is illegal for a taxpayer to claim a qualified relative that is someone else's qualified child. When two taxpayers claim the same child under the qualified child tests, the IRS applies what are referred to as tiebreaker rules. The first tiebreaker rule states that whenever a parent claims a qualified child and a non-parent claims the same qualified child, the IRS will grant the dependency to the child's parent. Here's an example. April is May's child and June's grandchild. April meets all the qualified child tests for both May and June. If they both try to claim April, the IRS will award the dependency to May because May is April's parent and June isn't. The second tiebreaker rule states that whenever two parents try to claim the same child, the IRS will grant the dependency to the custodial parent. The custodial parent is the parent with whom the child spent the greater number of nights. Here's an example. May and John are both April's parents. During the year, April spent 200 nights with John and 165 nights with May. The IRS would then grant the dependency benefits to John. Since a qualified child must live with the taxpayer for at least half of the year, this decision makes the most sense. The third tiebreaker rule states that when custody between parents cannot be determined, the IRS will award the dependency to the parent with the higher adjusted gross income. Here's an example of this. It's leap year and April lived with May for 183 nights and John for 183 nights. May has an adjusted gross income of $30,000 and John $25,000. In this case, the IRS will grant the dependency to May. And finally, when two non-parents attempt to claim the same qualified child, the IRS will award the dependency to the person with the higher adjusted gross income. In fact, only the person with the higher adjusted gross income can legally claim the qualified child. One more example. June is April's grandmother and Mildred is April's aunt. Neither May nor John can claim the child for one reason or another. June has an adjusted gross income of $18,000 and Mildred has an adjusted gross income of $28,000. In this case, only Mildred can claim April as a qualified child, assuming all other tests for a qualified child are met. And again, I emphasize that, except in the last case, if all parties can agree on who claims the qualified child, the IRS doesn't usually get involved. So what actually happens when two people try to claim the same dependent? Let's take, for example, the situation where John and May attempt to claim April and their custody is unequal. Let's just say John files his tax return first. He e-files it and the IRS accepts it. When May files her return claiming April and attempts to e-file, the IRS will reject it. At this point, if May still thinks she has the right to claim April, she can file her return on paper. When the IRS looks at both returns, they will send each parent a request for documentation of residency. This can be a custody agreement, school or medical records, or other written proof that the child lived with the parent for the greater amount of time. If both parents reply and the IRS determines that John is the custodial parent, they will award the dependency to John. If both parents reply and the IRS still cannot determine custody, they may A. ask each parent for additional documentation, or B. award the dependency to May because she had the higher adjusted gross income. If only one parent replies, the IRS will award the dependent to the parent that replied. If neither replies, the IRS will then recalculate the tax liability of each parent without the dependent until one or another parent presents documentation. This is also the same action the IRS will take if two people claim the same dependent under the qualified relative tests. The IRS will request documentation of relationship and support and award the dependent to the taxpayer who has the better proof. If neither taxpayer can provide adequate proof, the IRS will grant neither the dependent. And as usual, there are many additional details to these rules. Additional information can be found in the links in the description. If you found this video informative, please give it a thumbs up and subscribe for more content like this. If you have any questions, comments, or suggestions for future videos, please leave them in the space below. Thanks for watching, and stay tuned for more tax-related oversimplifications.